Welcome to the morning show, everybody. Welcome. We're going to be taking a look at several stories involving Bitcoin today. And the question everybody wants to know is this bull run over? Is it actually over? Did we miss the top and now it's just nothing but down? Because it certainly feels a little bit that way, but I'm going to tell you why I don't think that's true. So let's go ahead and get started. Guys, smash the like button, please. Smash the like button. Number one thing you can do about the channel. All right. A lot of red on the markets today. A lot of red on the markets. Let me refresh. Let's get their latest number. $3.39 trillion in market cap total. I'll get it back up to that $4 trillion level. Right now, we've got 231 billion in volume, pretty good for volume. Bitcoin dominance is down a tick from yesterday, 57.6%. ETH dominance is down more than a tick yesterday, down maybe a few to 12.3%. Turtle coin, what is that? Limitless, what is that? These are trending coins, guys. Ironfish up 85%. Interesting. Ironfish shows up in a story today for us. So it's the biggest gainer of the day based on some stuff from Coinbase. All right. Bitcoin coming in at 108,000. Yesterday on the show, we had these big, nice, beautiful green candles, and then they just got totally destroyed ever since. There's a cat eating a scarf there. Okay. Last 24 hours, down 4.5%. And Ethereum down 6%. Bounced back a slight bit in the last hour, but both are down. Yeah, with these big green candles yesterday, and then all of a sudden out of nowhere, legs got chopped off, and we fell all the way down to 104, I think, or 105, maybe it was. Look at that in just a second. Ethereum back below 4K, $3,800. Binance Coin down not as much as their competitors up there. Binance Coin continues to hold its own. We have XRP jockeying in for a position with Binance Coin. You can see they're relatively close, within 10 billion of each other. Now, what is this? Tether? Yeah, Tether. Okay. All right, let's look at the biggest gainer of the day. Well, let's check the hour first. Chain Opera moving. Man, Chain Opera. Maybe you want to get some of that wherever it trades at. I'm sure they probably have it on Femex at this point. We can check. Guys, don't forget we still have this Femex trading competition going on right now. You can get links down below in the description, as well as I forgot what I was going to say. Oh, we also have an exclusive trading group. If you click on the trading group, you'll get sent to a group where you verify, deposit a little bit of money on Femex. Should be able to do it no problems, and then boom, you get into our traders chat room, where we get exclusive calls from professional Femex traders. And shout out to Crypto Panda, he's in there posting a lot as well. Good stuff. Okay. Here. Nope. Okay. Improvement is blockchain, Monero on the back of the Zcash pumps, I guess. That's 24 hours. Meme Core is the only one that's up. There's not a stable coin. Chain Opera, these two. Okay. Here's that Zcash. Down 10% yesterday. Maybe a good place to get in, potentially. All right, let's go to here. So I've got my eye on that right there. If it goes back down to that, and take a long off of it, and it's definitely possible. See, I've got my little sessions indicator up here during the different trading hours across the world. And what I'm learning is usually New York will snipe the top and the bottom of the previous market. Traders get trapped. If you hit a long down here, you're trapped because of this wick here. And so to free that trap, it can come down, sweep the lows, and then come back up. Why is my market cipher not showing up? Let's try it again. There we go. But it's already cleared most of the highs and lows on these two candles right here. Okay. Let's go on the 4-hour chart. Turn that up on here. It's a little annoying. The 4-hour, we're right in the middle of the VWAP range here. For the daily. Did you say there was a red dot on the daily? No. Oh, never mind.
There's a red dot on the monthly and weekly on the corner.
Yeah, there is. You're correct. In the monthly. We've got to get back up to 113 or 114 by the end of the month. It seems like a tall order right now. Seems like a tall order. All right, let's go ahead and let's see. Why is Bitcoin dropping? Billionaire crypto whale places $250 million bet. Is it the top end? Is the top end for BTC USD? There's a funny McDonald's billboard I don't think is real, but there it is. Why is Bitcoin dropping? The mysterious $11 billion whale is back, and this time he's doubling down on another massive short. Blockchain data indicated that the trader opened a $235 million leverage short position on BTC earlier this week, signaling that big money may be hedging for another leg lower amid tariff fears and the ongoing U.S. government shutdown. According to Hyperscan, the Hyperscan position was entered when Bitcoin was trading near $11,190 using 10x leverage, which would effectively print billions of BTC USD price continues to crash. The short is currently in profit as Bitcoin is trading around $108,000. The whale who made $200 million shorting the Bitcoin crash to 100K has now moved $30 million to Hyperliquid and is shorting again. Just a week ago, the same wallet reportedly booked over $200 million in profit after accurately timing Bitcoin's sharp drop to 100,000. It appears that he might be right again with BTC stuck in what feels like a perpetual cycle of decline. Whale movement signal institutional level strategy underpinning Bitcoin mega short. The investor, who emerged first in September, made headlines after rotating $5 billion worth of BTC into Ethereum. This move briefly made the whale one of the largest non-corporate ETH holders, surpassing even Sharplink's treasury exposure. Meanwhile, newer Bitcoin whales aren't faring as well. According to CryptoQuant, these large investors now face $6.95 billion in unrealized losses after Bitcoin slipped below its average cost basis of $113,000. Bitcoin is trading below its average cost basis, leaving whales with the largest unrealized loss since October 2023. Glassnode data reinforces that picture, showing that short-term holder supply, typically more speculative, has increased, indicating that traders are re-leveraging after a cleanup of overextended long positions. So is this the start of something bigger? 99 Bitcoin's analysts say that latest turbulence looks less like panic and more like a purge. We're shaking off excess leverage. There's no guarantee we break out of this mess. Bitcoin's next test sits around $12,000, where liquidation clusters could spark violent intraday swings. If the move fails, support lines up near 108,000, 104,000. So, got a lot of support. We have a lot of support here at the $108,000 level. Get it there. There we go. So I have all these lines. I need to get rid of all my drawings here. There we go. All right. This is where support is, and right now you see we're slightly above it. It's just been a lot of flat movement, and then drastic movement, flat movement, and then drastic movement. Drastic, not Jurassic. There's no dinosaurs here. Okay. Meme coin wars, pump.fund versus meme core. Which one is the better opportunity today? I'm going to save this for another day. Bitcoin crashed 104K was flush, not crypto cycle failure. A reminder, we will not be having the show tomorrow or Friday. So the show will be back on Monday. Just if you're I call you my like smashers. You guys are here every day smashing the like. I've got a couple things got to take care of this weekend, and then we'll be back on Monday. Bitcoin's 4-day drop to 104,000 trigger what analysts call a defensive rotation among crypto investors. Experienced a 4-day crash last week, falling from 115,000 to a 4-month low of 104,000 by Friday. Levels last seen in June. Despite the decline, analysts said the correction flushed out excess leverage, prompting investors to shift from chasing gains to protecting capital. In a report Tuesday, blockchain analytics from Glassnode said short-term Bitcoin holder supply has risen, given that speculative capital is taking a larger share of the market. Combination of signals points to a market shifting into protection mode. Traders prioritizing capital preservation over directional bets. So you see the volatility spread is low, the options delta skew is moderate, and options open interest is moderate. Bitcoin's open interest fell by 30%, though, signaling the crypto market is far less vulnerable to another liquidation cascade. That's good. We'll add a zero soon enough. I mean, he's right. Eventually it will, but I don't think it'll be anytime real soon. What is this here? The time to change, point in time, long-term holder net position change. That's down in the red. Digital asset treasuries and exchange traded funds have absorbed an incredible amount of the long-term holder supply. Bitcoin's upside will remain limited until the cohort starts selling or stop until this cohort stops selling. Bitcoin ETFs have been hit hard by the political turmoil surrounding the president. On Monday, Bitcoin ETFs recorded $40 million worth of net outflows, marking their fourth consecutive day of selling. There you go. Crypto's decentralized illusion shattered again by another AWS meltdown. Everybody heard there was AWS problem in the last 24 hours? Yesterday morning. I'm sorry, Monday morning. Amazon Web Services experienced a major outage that cascaded into widespread service disruptions across thousands of websites and applications. Several large crypto exchanges and crypto service providers rely heavily on cloud infrastructure like AWS to power their trading platforms, wallets, analytic tools, and matching engines. The ripple effect hit the crypto world. Coinbase reported that its trading platform and its Layer 2 network base both went down. Consensus, Infura, and Robinhood similarly suffered during the outage. If your blockchain is down because of the AWS outage, you're not sufficiently decentralized. Almost nobody is, very few. You look at a project like ICP, and it actually is not on the Ethereum blockchain or a Layer 2. It's its own chain. It has its own decentralized version of the internet. That's one of the only ones that I know that's truly, truly decentralized. If we cannot connect to the Ethereum mainnet when AWS goes down, we're not decentralized. This wasn't the first time it caused tremors in the crypto landscape. April 2025, there was a disruption that knocked down several crypto exchanges and infrastructure providers. Layer 2 net Arbitrum, Optimism, Linea, Scroll, and Base. The incident exposed a central irony. Though these systems are designed to decentralize execution and scale, many of their front ends, onboarding systems, infrastructure gateways, and API layers still depend on centralized cloud services. The outage underscored the persistent tension within crypto. Protocols that champion decentralization still often rely on centralized infrastructure for critical operations. Even if blockchain nodes are distributed, trading engines, custody platforms, and relayers that connect users to them typically run on a handful of major cloud providers, creating single points of failure. The AWS outage once again reminds us that blockchain and really the internet itself is only as decentralized as the infrastructure it runs on. As the industry assesses fallout, the push to decentralize backend infrastructures continues to gain urgency. There's already projects out there that do this. They haven't really become popular yet, but there are ways to decentralize the internet. But when you're running so much business on it already, the way things are working, would be really painful to try to change into something decentralized, because that doesn't benefit the people working on it. People working on it, what benefits them is having easy available tools like centralized cloud servers. So we've officially signed a partnership with Sapien here on the channel, and it's a Pump.Fund competitor. We're gonna have more on Twitter later. If you want to go follow me on Twitter at Ben Armstrong's X. But this is just a little bit that shows you how much better Sapien is than Pump.Fund. when it comes to several different issues. No bots or snipers, humans only on Sapien. That's why it's called Sapien. You get it? Whitelist plus passwords, gated access. You raise the LP, no migration is needed. You don't have to migrate to the radiant pools or anything like that. Launch with your contract address and your supply only. Set a custom curve to suit your project goals. UNCX lockers integration, no perma lock, 80% trading fees forever, no third party fees for users. So it's just a little bit, it really blows Pump.Fun away. A lot of people know I've been kind of down on Pump.Fun. I think it's ruining crypto, but the reason is just because it's generating so many opportunities for scammers and snipers and bots to come in and get all the liquidity from real people. And so with Sapien, it puts the money back in the hands of the people, which we like. This is an interesting way to look at this. Money-losing companies with colorful histories have pivoted to crypto. A marketer of shark repellent sunscreen, a maker of chocolate-flavored whiskey, a seller of a drink that promises to quickly lower blood alcohol levels. Till recently, these businesses had significant losses and floundering stock prices in common. Now, they're members of a legion of publicly traded companies helping to power one of the biggest trends in market in the crypto industry. Billions of dollars have pumped into companies that have reinvented themselves by making buying and selling crypto their main focus, called digital asset treasuries. Rebranding as crypto companies came after years of losses in a variety of niche enterprises that include making lavender-flavored vodka, manufacturing materials for indoor marijuana growers, and selling ozone-infused water as a part of a nanobubble cleaning technology. The trend has attracted a wide range of people from obscure to well-known investors. We're going to change finance forever. It's that simple, Eric Trump said. It's a great milestone for our country as they announced a new digital asset treasury focused on cryptocurrency founded by the Trump family. But just how transformative the DAT craze will be remains to be seen. How they work. Publicly traded companies turn themselves into DATs by raising money through the sale of stocks and using that money to buy types of crypto. The money is often raised with private investors, sometimes with ties to the type of currency and the DAT will stockpile. In 2020, MicroStrategy became the first DAT when it started accumulating Bitcoin, the world's oldest and most popular cryptocurrency. Led by ultra Bitcoin evangelist Michael Saylor, the company's stock price has been one of the best performing in the past 5 years. The success of MicroStrategy, which was rebranded as Strategy, has spawned dozens of imitators. First wave of crypto treasury companies were focused on Bitcoin, but now it's becoming more niche. We got a story here. XRP treasury firm grows as Evernorth, backed by Ripple Labs, enters the arena. Fifth largest currency by market cap, XRP, is getting a new treasury firm, Evernorth. The firm will list on the NASDAQ and expects to raise over $1 billion in gross proceeds from SBI, Ripple Labs, Pantera Capital, Kraken, and GSR, according to a press release. Chris Larson, co-founder and executive chairman of Ripple, also announced investing 50 million XRP tokens worth $124 million. Net proceeds are dedicated for open market acquisitions. It joins some other firms, stockpiling XRP, Vivo Power International, Trident Digital Tech Holdings, and Weebus. So this is the new thing. Everybody's into this. Justin Sun is one of the most visible figures in crypto. He's been a key investor in Trump family crypto projects and was invited earlier this year to have dinner with the president. Sun has also been in legal fights with his former employees who allege abuse, the media mogul David Geffen, who alleged Sun committed fraud related to the sale of a pricey sculpture, and the Security and Exchange Commission, which accused him of market manipulation and improperly paying celebrities like Lindsay Lohan and Jake Paul to tout Sun's crypto. So there you go.
Hey, baby.
Yeah.
Should tell people to go take a look at BYND, Beyond Meat, on the stock market.
Why is that?
I think it's going to be the next GameStop.
What is it?
BYND.
BYND? The next GameStop. You heard it here first. Heard it here first. Base building private crypto transactions. Questions remain on how private. Coinbase, we acquired Brian Armstrong, Coinbase, so we acquired Ironfish team back in March 2025. Start working on this. More to share soon. So that right there is why on CoinGecko, Ironfish has been moving. Just one little tweet. So anyways, the question is, how can you make all transactions being private is important, but transparency and seeing transactions is also important in blockchain. So it creates this kind of conundrum between the two things. Do we want freedom? How much do we want? Because everybody shouldn't be able to see every single transaction you do. You want to see people making. You want people to be able to see
your government.
Well, it's not. It's anybody.
Right, but it's all this.
Do you want the government seeing every time you make a move? Oh, they already are, pretty much. So, anyways, it's an interesting story. You guys can check it out on your own time. It's about Ironfish and Coinbase trying to build private transactions. You saw Zcash is really, coming on up on the Zcash is rising quickly. So I think Monero may just be too hard for people to use. And maybe that's why it's not really hasn't taken over. So, but anyways, guys. All right. Well, appreciate everybody in today. That's all I got. Be blessed. Well.